We have a great guest today. David Keller is one of the best technicians. I know he has a demeanor for being tactical because, David, I don't know how you do it, but you always seem calm to me. I'm just an emotional guy. So, uh, comparatively, you've got the psychology that I'm trying to learn. So, welcome back, buddy.
Isn't there? Oh, there we go.
Hey, can you guys hear me okay?
Got you, David. How are you?
There we go. Hey, sorry about that. No, thanks and thanks for the kind introduction, Dale. I appreciate it. That's very kind. I feel like we need to throw some cool water on the market discussion in the day like today. So we'll do our
Okay.
best.
All right. Because, I see you on X and you do a lot of live stuff there. You have a lot of people watching you. I saw a YouTube video a few weeks ago where you were talking about what the signs of a bear market are, and that was right around the turn, or at least before things got very nasty.
Yeah.
So nice work, Dave. What's top of mind here to throw some cold water on?
No, I mean, I think the signs of this sort of bearish rotation have been building for quite some time, and I
Yeah,
forget the last time you and I spoke together, but really since November, December into January, you started to see some of those early warnings of breadth deterioration, of
yeah,
momentum deterioration, new highs on weaker
yeah,
support. And now you're just sort of seeing the downside rotation. And now, I mean, obviously, there's a lot of changes in the geopolitical environment, in news flow out of Washington, which is sort of it's putting an accelerant into the market volatility. But I
yeah.
would say the signs of a bull market exhaustion were pretty clear, and now we're just starting to see some of those initial breakdown signs that are really starting to follow through to the downside, with yesterday being like an exclamation point to that distribution phase.
Yeah, that was classic Wyckoff, wasn't it? That distribution. Everyone
That's right.
kept thinking it was just consolidating. Did the breakout, and maybe you could share your screen, Dave, did the breakout initially over 61, did you have to respect that? Even though it didn't do much, it turned out to be a false breakout. But a lot of people, including myself, I said, well, okay, we have a breakout here. It measures 64. And then I don't know, it was 4 days later, the breakout was negated.
Yeah. Here I'm happy to show. I don't have an
Yeah.
option to show my screen somehow, Dale. I'm so
Uh,
sorry.
oh, okay. Let me grab it and then give it back because whoever had it last didn't release it. Okay, try it now, Dave.
Yeah, I don't think I'm at the level where I can be sharing, unfortunately.
Oh,
Something I usually have like a share screen option. I didn't get it this time.
oh, you know what? Because you're not a panelist. That's why. Let uh,
Yeah.
let me promote you.
Okay. Okay.
That's what didn't happen.
Yeah. Yeah. Okay.
Anyway,
No worries.
anyway, live TV,
Here we go. Here
w-
we go.
with
Okay.
with an amateur producer. All right, I'm a host, producer, and booker. Everything. All right, we got
There
it.
we go. Can you see my screen okay now?
Got it, buddy.
Oh,
Yep.
perfect, perfect. Yeah, no, so I appreciate it. And I would say that that break above 6100, I guess the way that I've been seeing 2025 so far is that the peak was that December high at 6100. That's when we had the strongest momentum. That's when the RSI was last overbought.
Yeah.
That's when we made that last new all-time high. And then I see the January breakout and the February breakout as failed attempts to really push to a new high. And for me, I kind of give some natural wiggle room to support and resistance levels. I think some people really think, all right, if it's 6105, that means it's a new high. And I sort of see it more as a range than anything. So
A
I see
mattress.
the fact that those new highs were met with much weaker momentum tells you that these are false breakouts that are probably not going to persist much.
How
And
did you trade it, Dave? When you started getting signals, bearish ETFs, get out of longs.
Yeah.
Depend. What were you advising people, say, 2 weeks ago when you were starting to see these things?
So yeah, so there are a lot of different things you can do, and it depends more than anything on your time frame. I'm not a swing trader. I mean, that's not my primary time frame. If I was,
Okay.
though, these sorts of breakouts are where inverse ETFs, where
Yeah.
short positions, that's a bearish option structure would make a ton of sense. Especially, I mean, for me, I tend to ask the first question, what is the chart telling me is the likely path? And then what
Yeah.
position is going to help me best express that in a portfolio, right? That's kind of the two-step process. So when you have a clear sign that this breakout is probably not going to persist because of the weaker momentum, weaker breadth, the things we
Yeah.
mentioned, then how do you want to play that? So if you're short term and you're happy taking leverage and you're happy taking inverse positions, that's probably as good of a setup as I would see of selling into strength. For me, though, that tells me the days of thinking more about capital growth are probably behind us. The days of thinking about capital preservation are ahead of us. So I think you have two general things you can do. You can be taking on more risk, or you can be taking risk off the table. And I think going into those highs, you're taking on more risk reasonably because the market keeps appreciating. But then when you get those sorts of signals, it tells you to stop taking on additional risk, to focus on maintaining the capital that you have and unwinding positions that start to not work. And during
Yeah.
this period, it wasn't just the S&P breaking down, it's a lot of the Magnificent Seven stocks starting to really
Right.
reverse. I mean, February into March, I mean, even Meta, Alphabet, really good names in that group, just reversed and started to break down. So for me, it
Okay.
was more of a structural change in the portfolio, rotating to more defensive positioning, defensive sectors, higher yielding things, gold, just there's things outside of mega cap growth, which has been the trade for over a year, of course.
What do you tell someone who was paralyzed and they're still long?
It's so no, it's such a good question. And the worst
I
question that I
guarantee
get
you,
is,
there's guys like us. It's for us to be short or out.
yeah.
It's different than most people who just watch it casually and know every dip they're going to be okay. Then eventually they just stop opening their statements. But say for example, do you think that we're due for a little corrective action here? And would
Yeah.
you be raising cash if we got back to say 58 to 5,900, something like that?
Yeah, so what's interesting is I put these percentages on here if you can see it. We're about 9.5% off that
Yeah,
mid-February high to yesterday's intraday low. And that's
yeah,
almost identical in terms of price and time
right.
to that pullback we saw in July to early August. So if this is like one of the deepest correction in 24, this should be it. I mean, based on what I'm seeing and how the conditions have changed, I can't imagine this is it. I'm fairly certain we're going to have more deterioration before this is over. Having said that, having broken through 58.50, having broken through the 200-day moving average
Yeah,
specifically, the idea of a counter trend rally back into these areas is, I mean, not a certainty, but pretty likely. And that first bounce, everyone's kind of encouraged. Bears see that as a logical kind of dead cat bounce after a significant drawdown. That was the first wave, and now there are multiple ones that are going to come next. Bulls all of a sudden start waving the we did it flag, and we're all excited. We're going
yeah,
to go back to all highs. And so this next leg is crucial because if there's enough of a change, I would say a structural change, and for me that means breadth conditions, momentum, leadership that tells you that there's enough happening that could sustain a rally, then I think you have reason to be bullish. I don't see that as a likely scenario. I see this as more of a counter trend rally. If you were,
yeah.
and your
A
question
lot
was,
of
what if you're
chance.
holding it now? I think waiting
Yeah.
for a bounce and an opportunity to unwind at a bit of a higher level would probably be a really good approach here.
Okay. So yeah. So we're looking at this could be a failing rally. All the other 10% corrections did lead to new highs.
That's right.
Doesn't it look like there was much more technical damage done here? And you would think that it wouldn't just be a V bottom, that it would have some work to do if it was going to be an important low.
For sure. And I think the trick to differentiating short-term, very buyable pullbacks to the beginning of something that could be much more significant is just really trying to assess the conditions and compare them to previous corrective periods. And just the simple fact that we were above an upward sloping 200-day moving average for pretty much the entirety of
Yeah,
2024,
yeah,
those brief pullbacks happened within a clear primary structure. Now, what's happened in the last 4 weeks is we've now broken the 200 day, which, to some may seem like a minor thing. I don't think it is because I worked with a lot of investors that are not technically oriented. They all know where the 200-day moving average is. Even guys that aren't chart guys are aware, oh, we broke the 200 day. And so they
yeah,
they see that as a change. And then I would say the other thing is just all the structural change. And when I think about structural changes, it's defensive sectors that were underperforming for the longest time and now all of a sudden are outperforming. And not to digress, but this is a chart I'll show you that I think illustrates that really, really well. One of the things I look for is the relative performance of different sectors. So this is the relative performance of utilities, healthcare, consumer staples, and real estate versus the S&P 500. So if these lines are going up, those sectors are
yeah,
outperforming. They go down, they're underperforming. So back in those previous pullbacks, we're still in just a big long-term downtrend. And that last major drawdown, you saw this little blip where these defensive sectors start to improve. We've seen a much bigger improvement on a relative basis so far in 2025 than we've seen in quite some time. And I think that rotation to more defensive positioning is one of the signs that institutional investors are nervous and they're trying to hide out in the most conservative, safe, least risky part of the equity space. What told us that V bottom in July and August was a good one? It's because these defensive sectors start to underperform,
yeah.
which tells you that investors are reallocating and taking on more risk. So until I see that on a chart like this, I have to assume that we're getting defensive because we feel that further deterioration is a likely scenario. And at this point, this is what I'm seeing.
Yeah, what I think is a more negative sign than, I've been bearish Nvidia forever and Apple and the Mag 7, I use a joke that at least in the movie, three made it, right? And anyway, so so to me, what happened in the financial sector, in a
Yeah,
matter of a week and a half, they took 10% out of B of A. XLF got pretty badly damaged too.
yeah.
This tells me that they might be worried about a credit issue if we get this growth scare. Because they were the leadership, they held up the best, even during like the corrections in that we had last summer in
Yeah.
August, a big sell-off. So to me, this is more than just a chart breaking down. I think it has kind of a warning of an economic message that there could be problems in the banks.
I mean, what we have to remember, and 100% agree, Dale, and what we have to remember with all the headlines that are coming out and all the news from Washington, I mean, and arguably, not to get political, I mean, some of the decisions that are being made could end up being really good for the markets, but not in the short term. I mean, this is sort of short-term pain for long-term gain kind of approach.
Yeah,
And certainly the way that I think the market is reacting, almost a willingness to accept deterioration in stocks as a short-term cost of making changes that are perceived to have long-term benefit. And so I think in the short term, we have quite a bit to be concerned about. I mean, this week, of course, inflation data is going to be key, right? The next couple days,
yeah,
and I think we're one overheated inflation number away from this getting really ugly because all of a sudden that suggests that the Fed has a very challenging path to navigate if they don't already through the rest of 2025 and just brings further uncertainty. And that's been the sort of specter of inflation that tariffs and others would have inflationary results, which I think is a logical outcome. The market's starting to tell you that, yeah, that could be a real issue. I think the news from Delta earlier was important as well. I mean, sort of lowering guidance, but those are the sort of signs of weakening consumer demand, the consumer confidence sentiment, that can cause a lot of stocks to have a difficult stretch here. And we're heading into earnings about a month out, and that's where we could get additional color on that as well.
Yeah, and B of A took it harder than probably the hardest, but all of them. I mean, you look at Goldman Sachs, J.P. Morgan,
Yeah,
they really took it hard. That tells me that the move in bonds and rates is probably never more important if the B of A is probably under pressure because they have the largest duration book out there.
yeah,
So how does
yeah.
TLT, how does TL look at that in a matter of, a few days? Although we
That's
did
quick.
that in August, right? And
So,
came
and
back.
again, and this is the challenge, Dale, is the beginning. I mean, a steep garden variety 10% pullback within an uptrend and the
Yeah,
beginning of a 50% 2022 kind of decline
yeah,
look very
yeah,
similar. I mean, if you look at January 2022, it doesn't look that different from these two little pullbacks. This is kind of how
r-
it starts. The
right,
question is that next leg, right? And the bounce. And
right.
if you see legitimate accumulation or if you see just counter trend rallies. And that is where 2022 and other really painful years started to look even more different because you didn't have that recovery, right? You had that initial bounce and then there's more selling. The momentum never improved. The breadth never really improved. And so I think this next move is going to be a crucial one to watch for sure.
Yeah, and I think a lot of the Bears didn't even catch us because they were looking for 6,400.
Yeah.
Because you had 3 months to sell against 6,100, and
Yeah.
that wasn't enough. And the 7,000 bulls using the
Yeah.
7K handle. So why don't we take a look at TLT and give me your impressions of what we're seeing here?
For sure. So I think I mean the biggest changes that we've seen when we talk about structural changes, it's also outside of the equity markets. It's bonds. I mean
Yeah,
commodities, particularly gold, has not changed a ton. I mean I would say the technical
no,
profile is similar, but in the bond markets with the dollar, that's where we've seen significant
yeah,
shifts here year to date.
yeah,
I mean, again, I have a pretty simple toolkit, and I think what's happened with bonds is we've just had a very clear rotation from a distribution phase from mid-September really into early January to now more of an accumulation phase. I mean, stocks and bonds were sort of moving together there for a stretch, and now we're seeing that divergence where stocks are selling off, bonds are appearing are sort of continuing to rally. TLT's broken above a really just kind of simple trend line structure
yeah.
and
Gapped it.
broken to new highs. And now testing the 200-day, arguably starting to push above it here this week.
Buy pullbacks, and people know I'm bearish from last week. I didn't talk about a bond crash. I just said a pullback towards 89,
Yeah,
88, and
yeah.
that would be a right shoulder there,
Yeah, and
possibly.
I was going to say you almost see the beginning of a head and
Yeah,
shoulders like pattern here, and that could be. I mean, if you get that snapback rally in stocks, that
right.
would pretty reasonably, relate to a pullback to like 88, 89. At which point, I think that's a
Yeah,
pretty constructive pattern. And then I guess the big,
the
down leg for
dollar.
stocks probably involves this neckline being broken, which would be the neckline of that kind of
Nice.
big bottoming structure, if that makes sense.
Okay, yeah, everything you've said today makes sense. Do you like the miners? Dave, is there anything? I know everyone hates crude. Everyone hates oil. It's sitting on a major support level that it's probably going to break down out of.
Yeah,
And I'm waiting for that capitulation to get long. If you thought there was going to be a big rally in WTI
yeah,
after they clean out the bulls and maybe trade low 60s,
yeah.
what would you go with? Would you go with USO? Would you go with Devon Energy? For kind of a pure play on oil, um, what kind of oil stocks would you look at if you thought you were going to get like maybe a rally back to 90 or so?
Yeah, I mean, so honestly, I'd probably buy energy stocks if that's where I was thinking. I mean, key names because
Okay.
these are charts that have been incredibly underwhelming. But
Yeah.
I mean, this is the 1 month change in actually, let me just show like yesterday. So this is a heat map just showing
Yeah,
everything in the S&P 500 yesterday. You can see the big deterioration in mega cap growth and in the
right.
growthy sectors. Look at energy with like Exxon up 2.5%, COP up 2.5%. So, the energy has started to, really have an inverse correlation to growth, which makes sense, but it's really sort of it's been magnified here. The challenge
Okay.
for energy stocks, and the reason why, from a technical perspective, they've not been good, is because crude oil prices have just been consistently weak.
Yeah,
And for a while, I was sort of hammering on the, if and when crude oil gets above $80, that's when you want to start adding energy to a portfolio because that means there's enough of a gain that, energy companies are going to make money with higher oil prices. That's is a very close relationship between those two. You're seeing energy stocks hold up okay while oil prices are coming down, which means if oil prices
yeah.
actually start to improve, energy almost feels like a leverage bet on a rally in oil prices. And I think that would be a good place to be. So for me as an equity investor, it's challenging in a time like this to find things that are working, but I think they're out there. And if oil prices could turn higher off of support, I think that would be a really interesting way to do it. And it wouldn't be the big integrateds; it would be DVN and others that I'd probably be looking at.
Okay, thank you for that.
Yeah.
Because I do think that Israel isn't going to let its Iran. They probably already have a nuke, but I think they're going to do something. And if they do something, Iran already knows that they can't penetrate the shields that Israel has.
Yeah.
And so how do they hurt the world? They just aim their missiles at Saudi Arabia. Just
Mm,
some a narrative I've been thinking about. And our president, there is, I guess, evidence that Iran's behind assassination attempts on him, and I think he could probably go along with Netanyahu on a mission like that. So, we're going to have just so many things in the air. Now the government shutdown, or we're going to have a shutdown. Uh, can't believe the Republicans are going to give the Democrats a talking point and shut down the government. And everyone's recency bias is, they'll just kick the can. They'll kick the can. What if one time you know, they try and kick the can and they miss? You
yeah.
know, so anyway, wow, the world has changed, Dave, and you know what? People need to follow your clean, uh, understandable, and nuances of how you chart. And I know they could find you on X. You have a schedule when you're doing those shows on X, when you're streaming on X. Uh,
Yeah.
maybe we should send people to your website, and you probably have, you know, times listed there when they could see you.
Absolutely. So I do a market recap show every weekday, 5 p.m. Eastern, 2 p.m. Pacific, and I stream it on YouTube, on X, and Facebook and
Okay,
LinkedIn. So if you go to my website, marketmisbehavior.com, you can find all the info on the market recap show and my podcast, which Dale, I hope I can interview on if you'd be up for it very soon.
sure. Oh, okay. So you're interviewing some people too on your YouTube channel.
I am doing that, and I would
All
love to
right.
continue the discussion there for sure.
Okay, David Keller, everybody, and follow him on X for the look how clean these charts are. David almost David, well, not completely. He's wearing shorts. He doesn't trade naked. He has shorts on, but look at how clean those charts are. All right, well, David, thank you so much, my trading warrior brother, for being here and giving me some ideas. I think Devin might be the way for me to go when I see $62 WTI. So thank you so much. You're really enjoy your looks, bunch of great looks, and I hope this is one of your best years ever, Dave.
I
And
appreciate it, Dale. Cheers. Good to chat with you as
yeah,
always.
and not just in trading, in the important in the important ways.
You as well, Dale. You as
All
well.
right, buddy. All right, everyone, that's a wrap. You can join the team in 20 minutes on the Morning Edge. Okay, so what we do here in FACE is the tip of the iceberg. I've always said that. Um, find a community to work with. It's going to be really wild times, and you do need others' perspectives so that and keep an open mind. I promise you, don't be stubborn, be flexible, learn how to change your mind, have an open mind. It'll keep your account open. All right, everyone, don't just count your pips, count your blessings. Do that at least once a day. And this is Coach signing off. You're welcome, Timothy. Welcome to Face. First time I've seen your name. Uh, you've made your first step to finding a good place. All right, Laura, Marcus, see you guys. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.